What's up, YouTube? My name is Uncle Smokey, and this is Uncle Smokey Stock Trades. And before I start this video, I would like to say I am not a financial advisor, and this is not financial advice. So please take what I say with a grain of salt and do your own DD. Today we're going to talk about ticker symbol ROOT, Root Insurance Inc. Yes, I know, it's not MMAT, but that's okay. I'm not going to let this take away from my MMAT videos. This is going to be a little bit of a series into another stock that I'm pursuing, and I really think this could be the potential of a big short squeeze and possibly turn into a long run play into the future. So let's go ahead and get started into this company. So as you can see, this company is a very heavily shorted stock. They IPO'd in November at right around $29.50, okay? They got immediately pounded on. Now, these are red one-day candles. Every candle you see here is 1 day, all right? And when you're looking to see whether it is short squeeze capable, you need to look at a bigger, broader picture. Usually 3-6 months, even up to a year is a great time frame to look at because you want to see what the stock has done overall, where it has been, and where it could potentially be going. So, with that being said, as you can see, shortly after IPOing, it got heavily shorted. Now, that happens naturally all the time. And I'm not going to say it's a natural thing. This is absolute manipulation. This is the hedge funds and big toots trying to drive the stock down. Now, I'm going to tell you right here, they probably had a little bit of a catalyst, or maybe even a margin call of some sort, causing for a nice little event with a pullback, as you can see, full correction, okay? And then again happening. So this would have been maybe a mini squeeze right in here, okay? And then heavy shorting again, bringing it down even lower, making lower lows and lower highs, okay? This is an insurance company, and as we know in history, insurance companies generally succeed. They've got just many ways of making absolutely great money, and you're going to see that here very shortly when we get to their Q10. And then again, you had a little pop here, and then again, back to some major shorting. And every day. And that's how you know there's short positions just piling in, because it's constant red volume, leading into their earnings that just recently happened. This is the 12th and the 13th. And then now you're going to notice that there is some decent green shortly after, okay? So if you look at history on how candles set up, anytime you see that little 3-bar drag here over the course of a couple days and a minor pullback, you may be expecting a little rip. It's called a cup and handle. Huh? All right. So, and I know on this big picture, the macro picture, it doesn't look like it. But, here, let's see if I can make it look like it real quick. There. Cup, handle. It's there, okay? And it's not perfect because it has some mini runs, right? These are all little mini runs. And then this was the Fed die-off, basically, okay? But what I'm expecting to see now, guys, coming into even as early as Monday, volume to pick up and push it in the northern direction. I'm not going to say it's going to start the squeeze, but it could bring some eyes. Now, with that being said, I want to explain a little bit of the company itself, now that we know what I'm looking at when I look into a squeeze and how I approach the chart, okay? That to me screams it's coming, all right? If you want, you can freeze frame this. Uncle Smokey, this is what it looks like, you know, hey, let's see if I'm right in the future, right? I've got it already freeze framed. I do this to everything I look into. All right, so the next thing I want to do is hop over here to the internet. And for any of you that are new to my channel that are looking into this because it's Root, hey, I jump all over the place, guys. I'm a pothead. It happens. I can't help it. Everybody who does know knows me, and they subscribe. They know. Yep. I need a drink. Hold on. All right, so what I want to look at here, guys, is the other reason why I feel that this is being unjustly shorted, and they're ignoring the fundamentals of the company. Fundamentals are good things that happen with the company, balance sheets, catalysts, things like that. Well, a couple of great things have recently happened. Number one, their balance sheets have come out. Now, again, they've only been around for a short amount of time, so we got to take the balance sheets for what they are and realize that, yes, there's a little bit of a dip, but we're in Corona, okay? So all these companies are kind of taking small dips. But this is nothing to worry about. They have almost $1 billion. This is in millions. Almost $1 billion in cash. What? That's a lot of money. That makes us to be a very strong company. And basically no debt. Okay? So what I'm looking at here is shorts are shorting a company that's got fundamentally strong values as far as it goes on their balance sheet, and they just came out with the catalyst of Carvana. They are partnering with Carvana. Okay, this is an online company where you can go to buy a car. Now, I've not looked too much into them. I don't know a whole lot about this company because I'm not covering this company right now, but I'm going to figure them out because I am covering this company. All right. And the other thing I want you guys to remember is this company, Lemonade. Yes, I understand they're a homeowners and renters insurance company with pet and life now, but if you go back to their chart, again, I'm bouncing around. See? Boom. Back to their chart. Look how they started out. They started out as a heavily shorted stock. And again, they IPO'd not too terribly long ago, back in the early part or middle part of 2020, shortly before Root did, okay? But what I'm getting at is after these heavily shorts and then good catalysts, it ran up. And because we've just recently had a good catalyst, the announcement of a partnership, you can expect that soon, once you see completions and things like that, for that to be a good enough catalyst to see a heavy run up. But what I'm getting at is I'm seeing stabilization here at the $5 range. Okay, this could help us stay stable in this channel right in here between the 565, or I'm sorry, the 520 range and the $8 range. If we can trade in this range until a good catalyst comes, expect for some big shorts to be covered. Okay. Where was I at? Back to the internet. Back to these. Q10. All right, so now we're going to move on down here to their shares. So, a lot of times the mistake has been made that the retail needs to own the float for it to squeeze, and that is absolutely not true. Retail does not have to own the float. It would help, but it does not have to own the float. However, what does need to happen is the party that does own the float needs to understand that they're absolutely wealthy and they don't need to dilute the stock, which I do believe we have here with Root. Okay, I think that they understand that they are sitting financially strong and they have a good partnership with a great company, and this 139 is going to stay where it's at. Okay, basically supporting the fact that the retail is going to succeed in their ventures, and they're going to utilize this in the ventures for the company, moving into other aspects, maybe stretching out to other online car retailers or even dealerships in-house, things like that. Do you know what I mean? If I'm wrong, of course, let me know, but I'm pretty sure that's what they can utilize this stuff for. Now, Class A shares are you and me. This is the stuff that's traded on the open market. Each individual share counts as one vote. Okay, this is where it's important. These are Class B shares being shares that hold a stronger vote overall in the board. Okay, so basically, like I said, the company owns these shares. Insiders, things like that. These are the shares that could potentially be diluted into the stock. And the reason why I'm covering dilution is because it's going to be said. I know it's going to be said. It's possible. Refer to AMC. All right, always refer to AMC. AMC had X amount of shares. They took the Class B shares, they moved them over to Class A shares. It was a dilution event, dragging the stock down even further from where it was, blah, 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 yada, yada, yada. Now, AMC needed to do that. They needed to raise the capital. They needed the money. This company does not need any money. Don't worry about dilution. Don't think about it. Take it out of your mind. If they dilute this stock any further, they're going to lose their partnership. They're going to lose the retail investors, and they will get shorted to the ground. In my opinion, not financial advice, not a financial advisor, blah, 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 yada, yada, yada. But that's how it works. They manipulate the hell out of it. The hedge funds, the market makers, and the institutions, they manipulate the hell out of it, and they drag the stock down to the ground, expecting for the retail investor to pull out. However, that's not the case anymore because retail investors have gotten smart. Thank you, GME. Thank you, AMC. We're no longer dumb money. We might be money now. We're still crayon eaters, but that's okay. They're tasty. So let's go ahead and push past this whole idea of dilution. I think I can knock that out the water. And if they do it, I apologize. Don't be mad at me. This is a casino, largest casino in the world, as a matter of fact, and you are gambling with your money at your own risk. I say that on every video. Next spot I want to look to, Ortex. Now, you guys know I like this site. I like both this and Fintel, and I always tell you guys, this is a gauge, not a definite number. They do not report from every single exchange on the market. It's just that way. That's mainly one of the things that we're trying to fight. We're trying to get more transparency, right? That's something we're really looking to. Sorry, I just hit my mic if it made a loud boom. So currently we're at 91.39% utilization. Utilization is the overall number of shares available shorted into the stock. Currently 91% of them are utilized, leaving only less than 9% available, making it a very hard to borrow stock. That is one of the things in our favor. One of the other things in our favor is the cost to borrow. Cost to borrow is currently sitting at, this says 2.5%. I'm pretty sure it's not that high. I'm pretty sure it's actually right around the 1.5 to 1.75. This is more of an accurate number down here, okay? So I'm going to say 1.5%, but still, it's high, all right? Anything over 1% is pretty high. Generally, on average, they go between 0.35% to 0.755% on a stock that is strong, that is not a heavily shorted stock. You can go look at some of the bigger ones and see where their ranges are, and that'll basically confirm what I'm saying. I'm thirsty. Hold on one second, guys. Okay. So, days to cover, 3.28 days to cover. That's how long they're saying it would take for them to cover all of their short shares. All right. And this is averaged over a course of like a 3-month daily volume across blah, 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 blah. None of that information is really all that important. This is important, but where it comes from isn't too terribly important. Just know the fact that this is how long it would take for them to cover the short positions in current market conditions. Shares on loan, current 7 days ago, showing there's a big increase. The shorts aren't giving up. They keep shoving the stock down. Free float on loan, again, increasing. Estimated percent, this is estimated by Ortex. Estimated is 19.72. And then the exchange reported short interest is, this is of course as of July 30th, or I'm sorry, August 10th, 15.8 million. So it shows that they're in there. It shows that they're heavily shorting the stock, and that's why I think it's going to squeeze. Sorry, I got a little sidetracked there. My screen did something goofy. I've got touch screen, and I accidentally bumped it, so it V-lined on me. Fixed it. All right, so the other thing I want to look at is the average number of days on loan. And I cover this on the MMAT stuff for anybody who is new. I always take in account for people who are just tuning into my channel. Average days on loan is over the course, I want to believe, a 3-month period. They average it in. They take all the shares, they figure out how long they've been out there, and then they just take that number and create an average. But what that is very important, is because they can only hold it out there for so long. Well, actually, they can hold it out there for an indefinite amount of time as long as they can afford it. It's showing you how long they're already there. The longer that this plays out, the longer that they keep those shares out on loan, the more expensive it is for them to short the stock. So that would then create this number to start climbing, okay, because they're holding the stock for a lengthy period of time. That's kind of where I'm going with this. Look for this number to keep increasing if it does. Well, as it does, expect for this number to increase, which is only further increasing the chance for it to short squeeze. Now let's move over to Fintel. Fintel, short interest percent of the float is 27%. I do think their numbers here are slightly off. I think there's a slight miscalculation, but that's neither here nor there. It's not that far. If it is, I want to say within 2%. They're showing a 64% short squeeze score. Now, this is there's a big sophisticated algorithm that they use to determine that this is where it sits. As the higher this goes, the more likely it is for investors to pile in, retail investors to pile in and really start bringing the stock up. And that's what you're looking for right now. You're looking for a major volume increase. So currently its average trading volume is right around 4 or 5 million, roughly. And it did have a 3 million volume day on Friday. So here we go. This was the 19th, showing that there was only 65,000 shares available to be shorted into the stock, showing it was a very hard to borrow stock. Now remember, this is a leading prime brokerage, and you all know how I feel, whom I think this is. It is Citadel, but that's no confirmation. Anyway, they did return some shares back. Now this does not mean that they returned shorted shares. They can borrow shares and not use them, guys. They can borrow them and hold on to them, just pay the cost for what it is, and then just return them. They can do that, okay? In fact, you can even see that over here on Ortex that they can do that. Just because it changed doesn't mean that they returned shorted shares. They just returned borrowed shares, okay? So don't always assume that returning of shares is shorts covering. It's just returning of shares. I hope that explained a little bit of something for you. All right. Oh, here you go. Short borrow fee rate. As I had said, I expect for it to be right around 1.5% truly, and that is kind of where it is. And that's just because you're going to look at the minimum of what it costs, not the max or even average it out. If you average it out, you're just giving yourself a higher number, and it's really kind of irrelevant. Anything over 1 is expensive. Let's just put it that way. Anything over 1 is expensive. The higher this goes, the more expensive it is to short the stock, and the more likely the hedges are going to pay and they're going to lose, right? Right. Let's go over here. This is the short sale volume from FINRA. You can tell it's manipulated quite often. They short it. Anything this heavy is crazy, especially on a company that's fundamentally sound. I mean, again, they got $1 billion in cash, guys. This company is super strong. They've created themselves a pretty good app. I've been digging through it a little bit. I'm getting quotes and stuff. So, we're gonna go. We're gonna see what happens. Short sale transactions. This is something I've liked to cover with MMAT. It kind of gives you guys a gauge of what's going on. Now, I'm gonna explain this, of course, to the people who have just started listening. They don't really know much about this stuff. This is only transactions that are reported, disclosed by the CBOE, okay? This is not all of the exchanges. This does not include NASDAQ. It does not include any dark pool transactions. This does not include any of that stuff, okay? This is just the CBOE, guys, all right? So this is, from what I partake, kind of this number, right? Let's see if that lines up. So I've been kind of following the stock for a couple of weeks now, and you'll notice that number's pretty close, huh? So currently in the last 2 weeks, it's had about $10 million of short volume, which is kind of insane. That's pretty high, but it's not astronomical yet. And that's kind of because I don't know how to explain that, I guess. There's not been enough retail volume to offset any numbers for the short transactions to increase, if you know what I mean. It's all done by algorithms mainly. And the algorithms fight the retail investors. They try to drown the retail investor. It fights back and forth. And yeah, I don't know. I'm not going to concentrate on it. What I want you guys to know is it's heavily shorted. They keep shorting the stock. They're not covering the stock. The cost to borrow, or the days on loan shows that. And this number here, all of this information here is just Fintel trying to give you a little bit more transparency. They're attempting to make it a little bit more transparent. And they even show you that. They're trying. They're in the process of extending this coverage to the NASDAQ, the New York Stock Exchange, and off exchanges and dark pools. So Fintel's on our side, guys. They're really making the attempt. But anyway, I do this graph with MMAT just so people can follow along and see the daily average on what the numbers are on the short sales. This is only transactions over $5,000 or more. Let's move on to the institutional buyers and sellers. All right, institutional buyers. So this is one of the things I was talking about the other day. Effery, guys, Effery. Not here, not yet. Where's it at? Hang on. I saw a little bit ago. Right there. Boom. Look at this. Here's another one of these. DIAMX, Diamond Hill Long Short Fund Class A. What in the hell is this? A negative 788,000 shares? What? Well, you know how I am. I pull things up. They've got a 15% increase in ownership of negative shares, guys, with negative dollars. I don't know, man. Maybe if any of these new guys tuning in because they like Root know anything, drop me a DM. I'm on Twitter. I'm on StockTwits. Leave me a comment in the comments below. I'd love to hear it. So, I don't know. I do believe there's Effery here as well. I told you in my last video that I've seen this in other stocks, and this is one of the examples. I've seen this in other stocks. It's crazy. It's nonsense. It's ludicrous, and I don't know why, and I want to get to the bottom of it just like everybody else does. And finally, the sellers. I haven't seen any sellers in a few days, which is a good sign. It's just showing that in the last filing or the last publication, they didn't show any sales for a short period of time. They always take their time getting this stuff out. There still could be a couple of days left where you're going to see some new sellers sell off, but don't worry about that. It's no big deal. Finally, go ahead and look at the last couple websites I'm going to show you here. You've got Root, you've got Carvana, and you've got Lemonade. And go ahead and compare the companies. See where Lemonade's been going, see where Root's going, and you'll see that there's a lot of similarities between the companies and why I see that this could potentially even become a long-term hold into the future. But as for now, I think it's a squeeze. Back to the chart real quick, and I'm going to give you what I want to talk about here. Here's what I'm looking for. I'm looking for the stock to make a confirmation on this $5 range right here. I want $5 to become its support. If with another tap and lift off of it, I think that would be confirmation for me. So I am looking for a little bit of a pullback. If it hits $5 again, I'm buying in, guys. This is in no way, shape, or form financial advice. I don't want anybody to trade the way I trade. I want you to do your due diligence and make up your own mind and make this trade, if you decide to make this trade, on your own. Please don't say I screwed you. I only want you to say, Uncle Smokey, you were right. Okay? And the only way for you to do that is for you to make up your own mind and just use me as a gauge. So, I'm looking for a pullback to $5, and if it hits $5, I'm buying in. Now, if I don't see a pullback and I start to see an acceleration in volume push in, I might buy in a small position to ride a little squeeze up and expect for a pullback and then start selling off on the way down, trying to maximize some profits. Now, if it does not crack this $15 mark, I would not in any way, shape, or form call that a squeeze. Maybe gamma at most, but not a short squeeze. A short squeeze is going to generally top out all-time highs. You're going to start coming up in here. You're going to see millions and millions and millions and millions and millions of volume. You're going to see the entire float trade over itself multiple times in a squeeze, okay? So I don't want you to think it moving up like this is a squeeze. This is just going to be a good, a minor squeeze event that would be a great potential for making profits. So if it does happen to increase its volume on Monday, Tuesday, I will probably purchase in up to $8. So that way, if it pulls back at that point, hopefully using $5 as a support, I'm not out a whole lot of money bag holding for a while. And I don't mind bag holding on a swing trade, because a swing trade is exactly that. It's not a short-term play. It is a mid-term play. It could last anywhere from a few days to a few months. Okay, I'll hold out for a big squeeze. If this bad boy squeezes and this company stays in good fundamental values and they don't try and dilute this stock, I'm going to buy back in when this thing comes back down, and I'm going to ride it back up because it is going to go into the future. This could change a lot with insurance. With that being said, go ahead, do your own DD, like, subscribe my video, comment below. If I said anything wrong, just let me know. I'm a humble man, I can take it. I don't mind. Peace.